Imagine a cryptocurrency that soared to $1.70 in a flash, gathering hype, headlines, and massive momentum only to come crashing down over 50% just 2 days later. That's the roller coaster ride of PiCoin, a project that once stood as a symbol of innovation and potential, now facing intense pressure from its own tokenomics, investor uncertainty, and a brutal market shift. Is this the beginning of the end, or the setup for one of the biggest comebacks in crypto history? What's driving this sudden crash, and could it be the exact opportunity that smart investors have been waiting for? Stay tuned, because what we uncover in this video could determine whether PiCoin rebounds or breaks, and why the next few weeks could change everything. Welcome back to the channel. Today, we're digging deep into the whirlwind that's currently surrounding PiCoin, a project that once promised a revolution in mobile crypto mining and decentralization, but is now under the spotlight for all the wrong reasons. From sudden price drops to looming token unlocks, from big ecosystem announcements to the challenges of mass adoption, there's a lot happening, and it's all unfolding faster than most investors can keep up with. Just a few days ago, PiCoin was trading at $1.70. That surge gave the community a reason to celebrate, as it seemed to confirm that Pi's long-awaited breakout into the open market was finally happening. But in the blink of an eye, the momentum flipped. Within 48 hours, the price had plummeted by more than 50%, falling to a precarious 81 cents, where it's currently struggling to hold support. It wasn't just the price that took a hit, the market cap collapsed too, dropping from nearly $9 billion to just $6 billion. That sharp drop also knocked Pi out of the top 20 cryptocurrencies by market cap, pushing it down to 29th position, which affects not only visibility but also investor perception and confidence. So, what happened? Why the sudden crash? The answer lies in a perfect storm of market forces, some expected, some not. One of the most pressing concerns is the massive wave of token unlocks happening right now. According to data from PiCan, over 14.6 million Pi tokens are being unlocked today alone. That's not just a blip, it's a warning signal for potential selling pressure. And it gets worse. Over the next 30 days, a staggering 272.9 million Pi tokens, worth more than $234 million, are set to be released into the market. That means, on average, 9.1 million tokens will enter circulation daily, adding significant downward pressure on price unless demand can keep up. The most intense day will be May 28th, when more than 15 million tokens will be unlocked in a single 24-hour window. Events like this are often followed by sell-offs, as holders liquidate unlocked assets, especially in uncertain market conditions. And yet, despite these short-term pressures, there's a parallel story unfolding. One that paints a more optimistic future, if the right moves are made. The Pi Network team recently announced a $100 million fund dedicated to growing its ecosystem. This fund is designed to attract developers, incentivize the creation of decentralized apps, and expand the network's utility beyond just a digital token. In the world of cryptocurrency, utility is king. Hype comes and goes, but real-world use cases create lasting value. If Pi can successfully attract developers to build apps, marketplaces, and tools on its network, it has a genuine chance to rebound and build sustainable momentum. Moreover, speculation is rising around a potential listing on major exchanges like Binance or Coinbase. Currently, PiCoin remains unlisted on most of the big-name platforms due to its ongoing transition from a test environment to a fully open mainnet. But if the team delivers on decentralization milestones and satisfies the listing requirements, a major exchange debut could act as the catalyst that reignites investor interest and brings significant new liquidity into the market. Some analysts are already predicting that Pi could reclaim the $1.50 mark by the end of the month if such news breaks. Others believe that with enough adoption and utility, Pi might even aim for $2.50 by the fourth quarter of 2025. Let's take a closer look at the technical side of things. According to TradingView data, PiCoin's RSI Relative Strength Index is currently sitting at 53.55. This means it's in neutral territory, not strongly overbought or oversold, suggesting that traders are uncertain and waiting for a clearer direction. However, there is a glimmer of hope in the MACD, or Moving Average Convergence Divergence, which is showing a slight bullish crossover. This is usually interpreted as a buy signal and could indicate that upward momentum is slowly beginning to form. But make no mistake, we're still in a fragile market environment where any sudden move, positive or negative, can swing the charts dramatically. Interestingly, while all this market action plays out, the Pi network has quietly achieved something that many other projects talk about but few execute: true decentralization. Crypto analyst Dr. Altcoin recently revealed that the Pi network has permanently shut down its central coordinating node, a move that transitions the project from a centralized structure to a community-run, open blockchain. This is a landmark moment for the project. Removing centralized control aligns Pi more closely with the core principles of blockchain: transparency, trustlessness, and community governance. The impact of this move won't be immediate, but it sets the foundation for long-term credibility and resilience. In time, decentralization could increase demand for Picoin, especially among users and investors who prioritize ideological purity and trustless infrastructure. The community's reaction to all this has been mixed. Some early miners and holders are growing anxious, watching the price fall while waiting for promised features and integrations to materialize. Others see the dip as a rare buying opportunity, believing that the fundamentals are still strong and that the current downturn is a short-term overreaction. Then there's the silent majority waiting and watching from the sidelines, reluctant to jump in until they see definitive proof of progress or a confirmed listing on a major exchange. The next few weeks will be crucial. How the Pi network team communicates with its community, how they manage token unlocks, and whether they can secure high-profile partnerships or listings, all of these will determine the next phase of Picoin's trajectory. This is a turning point. Either Pi stabilizes, builds utility, and earns the trust of the wider crypto ecosystem, or it risks fading into the background as newer, more agile projects emerge. But one thing is clear. The story of Picoin is far from over. Whether you're a believer, a skeptic, or just a curious observer, this is one project that continues to defy expectations, for better or worse. The volatility, the ambition, the massive community, it's a mix that keeps Pi in the spotlight, even when the price dips. So if you're still holding Pi, thinking of mining it, or just watching from afar, stay informed, stay sharp, and always make decisions based on the long game, not the headlines. Thanks for watching. If you found this video helpful or insightful, don't forget to hit that like button, subscribe for more crypto breakdowns, and let me know in the comments, what do you think is next for Picoin? Is it heading back to the moon or back to the drawing board? Stay tuned. Stay curious. And stay crypto smart.